And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talk. My name is Dimitri. I will be your host for today. Hello, all Crypthusiasts here. So, today we'll be talking mostly about crypto regulation and legislation and the ongoing, let's just say, the ongoing strides from governments in order to introduce CBDCs. In this video, I will be highlighting not so much that CBDs will they come, but moreover, when will they come? And the answer might actually surprise you. Now, before I do that, let's do a little market analysis, see where things are going currently. I'm going to start sharing my screen here. There we go. So a little update on how the market is performing. As you guys can see, I've called up the Bitcoin versus US dollar one-day steps. As you guys can see, where my finger is pointed at here, my little mouse, this is June 2022. Currently, we are here. Let's start zooming in. You can see there were a few red days here, but since the beginning of this year, we have climbed up well, and we seem to be stagnating. Now, I know plenty of crypto influencers are probably giving mixed signals, whereas when we were here to the moon, we will be breaking through towards 25K. However, as you guys can see here, 25K is heavy resistance, and each time we push towards it, we see a fallback. Now we see current red line here, little descending triangle. Some crypto analysts will say, yeah, we're heading for a breakdown back into the bear market. However, what I might say is look at it holistically, look at the bigger picture. This beginning of 2023. So we are still up, still a bullish movement going on. However, when I say look at the bigger picture, it means that trend here to me is more or less stable. We are in a sideways trading market with some volatility. This becomes more apparent if you start zooming out, like I did here, and you see that we are back at August, June, July levels of trading. Levels of trading before Celsius crash, before Three Arrows capital crash, etc., etc. This is the FTX crash which occurred. So you can see we are back at those very same trading levels. However, we are even trading at a slightly elevated level. There's a big correction here, and we are probably trading at slightly higher levels from September 2022. This is the ultimate bottom, as you can see here, root resistance. I do not immediately think we'll be breaking through underneath 20K. By reason, well, if you see the line here, that's about 20K. We've been trading firmly above it. We were on the recuperation here. If I keep mouse steady, I should be drawing a line, but anyways, we're trading at those levels around here in October last year. FTX occurred November, December. Since then, we have been above it, and it has become a solid level of support. So people who are telling you we are back in a bull market, or people who are saying we are back in a bear market, don't believe them. We are in what I call a crap market. We are sideways trading. It is normal. 20K is currently heavy support. And if you look at closer ranges, especially in the last couple of months, you will see that even heavy support is somewhere near 21K range, 21 up until 25K. That's our current trading range. For the guys who want to DCA, I might say we are currently at lower trading range. However, new numbers are to be announced where it concerns inflation, etc. So await that news before buying in or before selling off if you are a day trader. By reason, the market can still go all sides. It can go slightly down, that it loses the 20K and goes towards 21K, or if the news is quite good, you can see a recovery towards slightly higher levels, perhaps towards 23K levels. It's not financial advice. However, what I do want to share with you guys is the general view I have. General crap market. We are in a good period to accumulate, still to DCA everywhere. Not really financial advice, but we are in a crap market. So don't get sidetracked by people calling a bull market or a bear market. With that, let's head on over towards the news articles that I have saved here and prepared in advance. By reason, well, crypto regulation is going to be big. We are currently, as I said before, in a bear market, meaning you guys need to be prepared for what is to come in the upcoming bull market. Currently, plenty of governments, plenty of banks, plenty of financial institutes are taking steps in order for maximal profit during the bull run, not only through accumulation of a variety of cryptocurrency. No, they are also preparing themselves with regulations, with legislation, with a variety of frameworks that work to their advantage. Naturally, let's head on in. First article from Crypto Potato. Crypto Potato, perhaps this is a little bit of a shill that I'm doing, but people have seen me use it quite frequently in all of my live streams if I'm using a variety of headlines and news and covering a variety of news articles. Reason thereof is that's actually my most trusted and most objective one. That's all I have to say about it. So anyway, Australia to postpone implementing crypto regulations due to investor outflows. Aussie authorities could set up a crypto regulatory roadmap in, those are important dates, 2024, 2025, believing investors are less interested in the industry. Will most likely delay enforcing the cryptocurrency rules for the middle of 2024 or even 2025. Why am I highlighting these dates? Middle of 2024 or approximately May 2024 is when the next Bitcoin halving will occur. Generally, with a Bitcoin halving comes a little bit of pre-hype and some, I wanted to say reconstruction, no, some recovery for the cryptocurrency market. You will see that Bitcoin will start increasing in value once again around those times, and 2025 is predicted to be the next bull run that will occur, pretty much like 2021 was. Local government was expected to impose rules by the end of 2022. Some expected the authorities would rush to do so this year, especially after the multiple collapses and investor losses that undermined the sector lately. This article shows that Australia deviates a little bit from the rest of the world. No hurry. Documents released on the Freedom of Information laws revealed that the Australian government will take its time before setting a comprehensive regulatory framework for the local cryptocurrency sector. Ruling body will contemplate a matter in Q2 and Q3 of this year and could roll out the legislation in 2024 or even 2025. What does this mean? It means they are setting up all the documents, they are preparing the framework, but that the rollout itself is foreseen 2024 and 2025, meaning that all their laws and all their advices will be present for the upcoming bull run. See where I'm going at here? While some customers believe the unrestricted environment could cause additional problems, Treasury thinks a rush would be unnecessary due to investor outflows caused by the recent catastrophes in the industry, such as the FTX demise. People who are slightly longer, well, have a slightly longer attention span do know. There's also a Celsius network. There was the Lunk, now it's called Lunk, but Terra Luna collapse, which gave the very first crash of 2022 with a sizable value loss in the crypto market, etc. So they were not alone, but all eyes are currently on FTX, still as it is the most recent one. Treasury considers these concerns are somewhat mitigated by the current market conditions, resulting in less consumer demand for crypto assets and the need to complete the token mapping exercise to provide clarity how any new licensing framework would operate in practice, the document reads. What does this mean? Well, they say there isn't much interesting going on in the cryptocurrency market. And that's true. Take a look here. What we're seeing, we are in a crap market. There isn't much going on. Even most influencers are gasping straws to come up with interesting news facts. Some of you guys might have noticed, even with my own live streams, that I'm less frequently covering the news when compared to the bull run. By reason, there isn't much going on. There is still crypto news going on, but most of it impacts specific crypto ecosystems. And if I should start covering that, that means I would need to indulge in millions of, well, thousands of cryptocurrency tokens and coins that I need to be up to date with. And sadly enough, my brain is but that big, and I have but that much time that I can invest. So there you have it. So this means, in general, very shorthand, cryptocurrency market has been stabilized. There isn't really much going on where it concerns investors' interest, meaning they find it less important to do something now. However, they are preparing the framework. The officials further maintain that the rise in interest rates, a policy that numerous central banks initiated to tackle the galloping inflation rate, or worldwide inflation rate, has pushed investors away from risk assets, including cryptocurrencies. That is not entirely true. A lot of people have invested in risk assets. However, due to the ongoing inflation rates, inflation worldwide, people have been forced to either sell their risky assets or hold onto them and put them in stagnation somewhere else. That's what's going on. Subsequently, statement informed that Treasury had formed a special crypto policy unit in the department whose main goal is to ensure maximum consumer protection. That is something which you will see occur numerous times worldwide by governments stating it's for consumer protection. You can see my head nodding. There's a few grains of salt with that one. The division intends to propose a ban on cryptocurrency acts to shield individuals from fraudulent schemes. A ban on cryptocurrency, so it implies in the forthcoming bull market, we might see some news from Australia coming that there are a variety of bans going to be imposed. So this shouldn't come as a surprise. A warned man comes for two. So, as they mentioned it, a little bit of prediction. Are Australians really backing off from crypto, contrary to the Treasury's assumption that interest in cryptocurrencies has recently vaporized? A Finance research from October last year showed that 23% of Australians have some exposure to the asset class. Recall the figure was 17% in 2021, so it augmented with 6%, meaning there's more and more adoption of cryptocurrency and Bitcoin going on. Actually, it is, as I said, that, what actually is being shown here is that, people aren't really backing off. Adoption is ongoing. However, the cryptocurrency market is quite boring currently. Binance US says they attempted to hire Gary Gensler in early days. For people who are not in the know, who's Gary Gensler? Gary Gensler is the head of the Securities Commission in the US. They are in the spotlight currently by saying, doing an all-out war on cryptocurrencies. That's basically where it comes down to it. And why am I highlighting this article? Well, not so long ago, still in the crosshairs of FTX, Binance were the first to say, they wanted to do market manipulation. They had approached the SEC in order with bribes and tippings in order to manipulate the market, to help them out with legislation and regulation that would favor them. I haven't forgotten about this. And TopSec official steps down after meeting with SBF and FTX. This was December 30th last year. Guy stepped down. Why is he stepping down? La-dia-dia-dia. Updates. And then we see something like this. Now, this is something you shouldn't be surprised about. Binance and FTX, they were competitors in the same field when it comes down to it. I'm not going to get deeper into detail in these articles. Just know that the big players were or still are trying to influence legislation and regulation. Some will say it is to protect us, their clients, but in reality, do not forget, Binance and formerly FTX are still companies who want to make a profit. They want to have certain exemptions within the regulations. They want to influence it in order to get better profits, to be better positioned, to become the biggest one around. Do not forget, and that's one of the core aspects which attracted me to blockchain technology, cryptocurrency, and especially Bitcoin, everything is about decentralization. Everything is about supporting community supported networks, peer-to-peer transactioning, and freedom of money, let's just say. So seeing something like this and that should make you wary about other exchanges. Now, Kraken, for example, is an exchange I trust, not hyping them up, but do know they probably as well are trying to steer the markets in such a way as, well, taking steps towards something like the SEC or other government instances where they can try to leverage and have a favorable ruling for their own company. Shouldn't be surprised about that one. So, as you can tell, I'm playing Twitter Live by CZ, so as you can see, it is a game of influence. Now, we are slowly stepping now from, expect a framework to be made, but I'm highlighting these two articles by reason that there isn't really one person or one organization dealing with everything where it concerns framework for the legislation and regulation within the crypto field. Plenty of other organizations, and I'm now talking about FTX here and Binance, but I also mentioned Kraken, but as well Coinbase, JP Morgan, and plenty of other centralized exchanges, I'm going to say, plenty of other exchanges, and even financial firms are trying to have their say in it. It is one big gray zone of people tipping each other off and seeing where things go. G20 meeting of financial chiefs takes a step forward towards crypto regulations. The need for regulation is being felt across the crypto spectrum after the series of collapses and bankruptcies since May 2022. It's a bit of a hyped headline. Myself, I dare say that not so much the need for regulation is needed, but moreover, more education is needed within the crypto sphere. By reason, everything which crashed was something that occurred due to bad management, due to bad centralized actors getting too greedy and wrecking themselves. But naturally, they will take these cases as a very good excuse in order to set up a legal framework for, naturally, consumer protection. G20 finance ministers and central bank governors meeting on February 24-25 in Bengaluru, India, concluded with a strong commitment to regulations for the cryptocurrency sector. Which ones? No idea. International Monetary Fund, EMF, Bank for International Settlements, BIS, and Financial Stability Board, FSB, have been tasked to come up with recommendations and a roadmap for regulating the cryptocurrency sector. Look forward to EMF synthesis paper, G20 chairs, I'm going to read it. It will support a coordinated and comprehensive policy approach to crypto assets by considering macroeconomic and regulatory perspectives, including the full range of risks posed by crypto assets. That's an all and nothing saying sentence. Besides the finance ministers and central bank governors, the event was attended by Kristalina Georgieva, I'm very bad with names, managing director of EMF, Augustin Carstens, general manager of BIS, and representatives of the Financial Stability Board. Klaas Knot, chairman of FSB, sent a letter to the G20 meeting in which he mentioned that the FSB preparing recommendations for regulating cryptocurrency and decentralized finance. This year, the FSB will finalize its recommendations for the regulation, supervision, and oversight of crypto assets and markets. These recommendations target at global stablecoin arrangements. Try to remember what I highlighted here. Recommendations targeted at global stablecoin arrangements, which have characteristics that may make threats to financial stability more acute, the letter said. Ben and Tough Talk need and call for regulations, so practically they are saying it is a top priority. Now, I've highlighted here in this talk global stablecoin arrangements. That falls in line with what occurred with Terra Luna, with the Terra USD stablecoin crashing and, well, taking the market entirely down with it, as it lost its peg. FTX fell down as FTT depegged, and, well, plenty of other issues came floating above, whereby mismanagement and, well, fraudulent practices came above. However, nothing really was the fault of stablecoins. Fault was made was mismanagement and fraudulent practices. With crypto itself, nothing bad was really happening. That's an important thing to remember. Ripple CEO says America falls behind other countries in crypto adoption. Garlinghouse believes countries like Australia, Japan, and Singapore have done the right thing by establishing clear crypto rules. CEO of Ripple, yada yada yada. US is now catching up. So basically, he's saying praise Japan and the other ones. The US needs to be more stricter. Why is he saying this? Well, probably he is highlighting that the SEC versus Ripple case will set a precedent in US law giving where it concerns cryptocurrency. Now, what I might say is, in the beginning, I would say, yeah, in a certain sense, it is an important event. But at this point, I am more convinced that the cryptocurrency market isn't going to be as impacted as we think it might be, no matter the outcome of the SEC Ripple case. By reason, Ripple itself, you can consider it a cryptocurrency, but it has more in common with CBDCs or central bank digital currencies. I'm not going to get deeper into it. I can make plenty of arguments. If you have questions about it, you can ask me why I think so in the comments down below, or even on social media. I'll give you an answer there, but I'm not going to indulge once again in that discussion. Repeat myself plenty of times where it concerns that one. However, my current opinion is the SEC case, yes, it will be looked upon and it will impact slightly the cryptocurrency market, but not to such an extent as most people think. Just by reason Ripple and XRP, well, aren't really to be considered cryptocurrency, but moreover as some privatized central bank digital currency. It's also important. Leading UK banks with hefty restrictions on crypto purchases, basically saying that currently in the UK, as I said, we're going worldwide here. In the UK, currently, there are restrictions on cryptocurrency buying, selling, etc. Plenty of banks. Where was it? It is. Have been banning transactions towards centralized exchanges in order to buy cryptocurrency, all having to do with their current state of the economy, as well under the guise of consumer protection. However, do realize each time you buy cryptocurrency, you are basically donating to a global money pool. Your money with which you are buying your cryptocurrency does no longer add up to the national product, towards your national, a state's very own economy. That's basically what I'm hinting at. So I'm not surprised the UK, especially since Brexit, um, implementing a variety of bans and limits in order to protect their economy and prevent retail outflow of several billions of pounds towards cryptocurrency. What they are doing here is basically protectionism. Actually, this is something to keep in mind as well when regulations and legislation concerning cryptocurrency is being rolled out worldwide. Governments will always double check with their allies and partners, but they will check up as well the current state of the economy. And you will see will become more restrictive when their own economy lies in shambles. Such is the case with the UK. Now, what is this? Now we're going to talk about Europe. Financial services, European Union regulatory framework for crypto assets. There is one. Yes, it is. A roadmap has been produced with feedback that you could enter during the years 2019-2020. But was a public consultation, commission adoption, etc. So it is ongoing. And naturally, who are the people who can give feedback? Well, plenty of governments and banks can do so. European Savings and Retail Banking Group from Belgium, Links Foundation, etc. Digital Asset Association from Austria, Onarium, Paris Europlace, etc. So a roadmap has been instigated. Why? Legal and regulatory framework for blockchain. What are they doing? They recognize the importance of legal certainty and a clear regulatory regime in areas pertaining to blockchain-based applications. Strongly supports EU-wide rules for blockchain to avoid legal and regulatory fragmentation. Commission adopted a comprehensive package of legislative proposals for the regulation of crypto assets in order to increase investments and ensure consumer and investor protection. Package updates certain financial market rules, and here we see why. A digital euro. European Central Bank and the European Commission Service are jointly reviewing a broad range of policy, legal, and technical questions leading to the possible introduction of a digital euro. Possible introduction. No. They consider this in the context of their respective mandates and independence of yada 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 yada. Regulatory sandbox, highlighting why. What is this? This is the roadmap towards the digital euro. This is a factual roadmap. You can see here, source ECB, European Central Bank in Europe. So when I started this live stream, I mentioned naturally regulatory framework and that we would be talking about central bank digital currencies. This is their end game. You can see the roadmap. Q4 of 2021, project team onboarding, governance setup, prioritization of use cases, focus on offline and online availability. So it's all about design and setting up the regulatory framework. We are currently here, first quarter 2023. Focus on compensation model, access to digital euro ecosystem. They're developing ecosystems, value-added services, advanced functionalities, prototyping results. This is important by reason in 2021, 2022, a digital euro test project was already rolled out in Italy. 2021, 2022, there was the introduction of the digital yen. There has been strides in creating the digital dollar in the US. This means that CBDCs are not something of we. The question of CBDCs, I've mentioned it in the beginning of this video, and I'm stumbling across my words here. Question of CBDCs is not will they come? Question is when. And I dare say, autumn of this year, Governing Council decision to launch realization phase, meaning autumn this year, CBDCs will be introduced in Europe and, well, make part of our traditional system. This means that the frameworks are being developed, means that legislation and regulation is ongoing on the down low. I mentioned it here, targeted at global stablecoin arrangements. Why the focus on stablecoins? People will say, oh, just because of FTX and Celsius network and the Terra Luna crash with its Terra USD, and it has shown that stablecoins aren't as trustworthy. Entirely correct. Stablecoins are also the direct competitor towards central bank digital currencies. As a matter of fact, each and every stablecoin you see or know about is a direct competitor to a CBDC, by reason that such stablecoins are more or less privatized money. It is money not in hands and cannot be steered by central banks and central governments. It's one of the reasons why I mentioned on my website, graciousInterest.com, that stablecoins and CBDCs are as equally bad. All regulation and legislation will be either about preventing stablecoin usage and switching over towards CBDCs on central exchanges. Why? We are talking already about digital money. What they're trying to do is give an immediate on-ramp on central exchanges which are their only entry point into the cryptocurrency market. If they can steer stable coins or the coins with which you buy crypto, they have a bigger grasp on the cryptocurrency market in total. They can see who buys and where he buys, and they can prevent the transactions from taking place. Simple as that. Current stablecoins, you have to deal with a variety of financial constructs which allow not all to clear monitoring. That's a big difference here. So where it concerns regulation and legislation, their focus will mostly be on the introduction of central bank digital currencies, meaning that stablecoins will be seen as direct competitors and will be pushed on the side as much as possible. So you can expect in the next bull run or in the forthcoming years, central exchanges will suddenly come up with direct buying services, that you will no longer need a BUSD, of which the US government already said to Paxos to stop minting it in February of this year. See where I'm getting at? And that future-wise, when the digital dollar is being introduced, they have an immediate on-ramp on Binance and whatever other exchange which makes use of stablecoin. This is their endgame, to further develop their grip on the cryptocurrency market. Now, what other legislation and regulation details are going to be implemented? Well, everything currently is on stablecoins, I want to say no, on central bank digital currencies. However, they will try to implement a framework for taxation. Currently, taxation everywhere in the world It depends from country to country and state to state, more or less, if you should pay taxes depending on how much crypto you invested in, and if you buy or sell, or if it's to simply hold. Worldwide, it's quite a gray area. Few countries pop out where legislation and the framework has been established, but they tend to be quite strict. So strict, as a matter of fact, that governments tend to shoot in their own feet. Framework that is being established and being developed will focus on, as I said, the implementation of central bank digital currencies, but they will also streamline taxation and the leverage they have over retail. And that's what is going to occur. We'll stop sharing my screen. And I'm going to stop this live stream. I have had my say here. I hope you guys found it interesting what I've been talking about here. There's quite a few predictions I've made for the future. I'm really talking here 2024, 2025, even late of this year. I'm pretty sure things will come about as I have said during this live stream. So with that, I'm going to end it up here. If you like what I do, down below in the comments are a few links with which you can support me. You can naturally like, subscribe this video, leave a comment down below. And with that, thank you all for watching, and until next time, bye.